Hi Baxio traders, welcome again to our new market update. In this one, we will look at current market conditions. We will check the strength of smaller coins compared to Bitcoin, and we will compare the all three portfolios we were trading together, looking at the main differences and the main strength of the new updated portfolio. Okay, so firstly to current market conditions on Bitcoin, you can see that it's still moving sideways. The price action is honestly pretty boring. Every market movement upwards is resulting to the downward movement and again. In these conditions, it's pretty tough to trade. And honestly, I know a few funds that are in a drawdown of 50% plus. So one of the toughest conditions we were in crypto in general. I've made quite a few tests to compare current sideways market to sideways market in the past in crypto. And this one is the longest one with the most range bound market ever. Well, this is a bad news, but the good news is that this kind of price action usually results in a big momentum or a big breakout. You can see it, for example, here, the market was in a range bound market and then we were in a trend. On the other side, there is again some shorter term range bound market or congestion and again strong trend. What we know usually that the longer the congestion, the stronger the movement that happens after the congestion. Of course, it's not always 100% true, but it's something that we can expect with some probability. So we just have to survive these conditions and wait for the better ones. What's also interesting is to look at the current performance compared to Bitcoin. You can see that these days we are getting close to all-time lows, which means that most coins are underperforming Bitcoin by a lot. And you can even see it here because this is total 3, not just Bitcoin. And total 3 right now is in a drawdown of 30%, but it was also in a drawdown of minus 40 to minus 35%. And again, a lot of range bound market conditions. If we zoom in a bit, we can see what's happening. The market is just getting in some trending period just to turn to the downside again. The same here and here and here and here. And there's a problem for longer term trend following. We do trade these strategies. Why? Because over the long term, in years, let's say, they do deliver huge results, especially in crypto. But their downside is that in such a condition, they just return back some of the returns they made in the past. Now, what's important to understand is the difference between V2 portfolio you were trading and V3 portfolio that we are trading right now. Basically, V2 portfolio included a lot more longer term trend following or momentum strategies, especially to the long side. You can see it here. And this is the reason why the portfolio was losing in such a range bound market. It's simply the characteristics of this trading approach. The same with trend short strategies. Again, most of them were longer term. Honestly, the main reason is that we weren't able to find short-term strategies that have edge and that were robust. Our research with these strategies lasts over 2 years, and just now, just with V3 portfolio, we got to something that is pretty nicely tradable. And you can see it in this chart. This is basically the main difference between V2 trend strategies and V3 trend strategies. Because V2, especially short trend strategies, were flat in this period. Why? Because the market wasn't trending enough to the short side to make enough profits to lock it with these longer term short trend strategies. But in V3, we do have more shorter term momentum or shorter term trend strategies that are in the market just for 1 to 3 days, and they do deliver profits more often. Of course, there is some downside, and it is that if the market will deliver huge trends, those shorter term strategies will not make as much money as these longer term strategies. But we do keep these long term strategies in the portfolio too. So that's pretty good. And you can see it here. If we compare V1, V2, and V3 portfolio, the main difference is because of these shorter term strategies. V1 portfolio is in a deepest drawdown. Why? Because it includes the most longer term momentum or trend following strategies. In V2, we already had some shorter term strategies. And in V3, we really pushed these shorter term strategies quite a lot. And that's why the results are much more stable and they will deliver more stable results over the long term. But of course, we need at least some movement in the market. If we look at the whole V3 portfolio, it's doing quite good. The mean reversion part of it is pretty stable. Of course, it also has some kind of drawdown from time to time, which is something we just got here into. And the trend following part is really very stable. If you look at the conditions we are trading right now, we are basically going sideways, which is just perfect. So we only have to wait until the conditions will be better. It's always the case. It's always in the market. There are periods with high volatility and with great trends, and then there are periods with sideways market and basically a range bound trend or non-trend. So that's something we just have to go through. We have to be consistent, we have to trade stably, and we have to be prepared for the new trends which always happen in the future. Okay, thank you for being with me today. This market update was after a little bit longer period. Next time it will be in 2 weeks again as usual. If you have any questions, just ask please. Bye.